All right, everyone, get ready for our deep dive today. We're tackling stock buybacks. What are they? Why do companies do them? And what does it all mean for us as investors?
A lot of investors don't really pay attention to buybacks, but honestly, they can give you a real peek into how healthy a company is and what they're planning for the future.
You're totally right about that. I mean, I was just reading about these three companies, Etsy, Kroger, and Marathon Petroleum, and they're all doing these huge buybacks, but for different reasons.
Yeah, that's a really good example of how buybacks aren't just one thing.
Mhm.
Companies use them in different ways depending on their goals.
Totally. So before we get into specifics, let's break it down. Like, what exactly is a stock buyback?
Sure. In the simplest terms, a stock buyback is when a company uses its profits to buy back its own shares from the market.
Like if you imagine a bakery buying back some of its cookies.
Exactly.
So there are fewer cookies out there, which makes each one a little more valuable.
Exactly. By reducing the number of shares that are out there, each one that's left represents a bigger piece of the company.
Okay, so that's how it works for shareholders. But why would a company want to do this?
Well, there are a few main reasons. One is that it's a way of signaling confidence in the company's future. Like they're saying, hey, we think our stock is a good deal and we're putting our money where our mouth is.
Yeah, it shows they believe in themselves.
Exactly. Another reason is that it increases their earnings per share. So basically, they have fewer shares out there, so their earnings are spread across a smaller pool. And that makes each share look more profitable.
That makes sense for investors, especially those focused on earnings per share.
Right. And lastly, buybacks can be a way to give value back to shareholders, similar to dividends.
So instead of giving cash directly, they're making the shares themselves worth more.
You got it.
Yeah.
Like they're reinvesting those profits back into the bakery to increase its value.
So when we see a company announce a big buyback plan, is that always a good thing? Or are there some warning signs we should look out for?
That's a super important question. While buybacks can be a positive signal, you really have to look at the whole picture.
So even if they're throwing around billions, it's not an automatic buy signal.
No, not at all. Investors need to ask, does this strategy make sense for what they're trying to do? Is this really the best way to use their money?
It's like being a detective, isn't it? You have to try and figure out what's really going on behind the scenes.
Yeah, I like that analogy because sometimes, a company might use buybacks to cover up problems or to boost their earnings in the short term.
So it's not always about strength and confidence like we talked about before.
No. Savvy investors, they look for real sustainable growth, and a real commitment to shareholders, not just some quick fix.
All right, so I'm really curious to see how these companies we mentioned are using buybacks to try and hit their goals. Let's start with Etsy. They just announced a huge, like $1 billion buyback program.
Yeah. Etsy's a really interesting one. They're really tied into what's happening globally, especially with the US dollar potentially weakening.
Wait, a weaker dollar? How does that affect a company like Etsy that sells, handmade and vintage stuff?
Well, if the dollar's weak, it makes Etsy's products cheaper for buyers in other countries, which could mean a lot more sales for them.
So they're betting on global trade and using buybacks to show they're serious about it.
Yeah, that's a good way to put it. They think more people overseas will be buying, and this buyback program is a way to make the most of that opportunity.
So it's like they're getting ready to bake a whole lot more cookies.
Ha ha ha. Perfect analogy. And it seems some analysts are seeing the same thing. For instance, Truist Financial thinks Etsy could hit $70 per share. That's like a 19% increase.
Wow, that's a pretty sweet prediction.
Definitely.
So we've got Etsy riding the global trade wave.
Right.
Now, what about Kroger? They have a buyback program of $7.5 billion. How does a grocery store chain get involved in all of this?
Kroger's actually using buybacks more defensively. Like, in case the economy gets shaky, people always need to buy groceries, right?
Oh, tell me about it. My grocery bills never seem to go down no matter what the economy's doing.
Exactly. So Kroger is seen as a safe bet when things are uncertain, and their buyback shows how confident they are in riding out any storms that come along.
It's like they're building a bunker out of cereal boxes and canned goods.
I love that image. What's interesting is that Kroger's already doing really well, like near their highest point in the past year, and they're still going all in on these buybacks.
That says they think there's even more room to grow.
Yeah, and Wells Fargo agrees. They're giving Kroger an overweight rating and a $73 price target, which could be an 18% upside.
Okay, so we've got Etsy riding the global trade wave and Kroger playing it safe in their bunker. Now, what about Marathon Petroleum? They have a $5 billion buyback plan How do they fit in?
Well, Marathon's strategy is all about the oil industry bouncing back. Remember how we said a weaker dollar could boost manufacturing all over the world?
Yeah, which would mean more demand for oil.
Exactly. Marathon's basically betting that oil demand will surge as the world economy picks up, and they're using buybacks to take advantage of that growth.
So they're fueling up for a potential boom in the oil market.
Perfect way to put it. And the projections are pretty wild. Analysts are saying their earnings per share could increase tenfold by the first quarter of 2025.
Tenfold. That's huge.
It is. And Wells Fargo, they've set a price target of $186 for Marathon, which could mean a 30% gain.
Wow. So it seems like all three of these companies, Etsy, Kroger, and Marathon, they're all using buybacks to try and navigate what's happening in the economy right now and get themselves ready for future growth.
Totally. It's a great example of how, when you really understand what's driving these buyback decisions, you can get some valuable insights as an investor.
I'm really starting to see that buybacks are more than just a financial move. It's like they're showing us how they think about their business and what they see for the future.
Exactly. And for investors who can read those signals, it can be really profitable. It's really interesting to see how these companies are all using buybacks in totally different ways.
Yeah, it's like they're each using a different strategy from the investing playbook.
Exactly. And that's why it's important for investors not to jump to conclusions about buybacks, you know? They don't always mean the same thing.
You know what? I'm starting to think of buybacks as a way that companies talk to investors.
I like that. That's a good analogy.
Like any language, you have to understand what they mean, not just the words they're saying.
Yeah, for sure.
So, how can we investors get better at understanding this language? What should we be looking for when a company announces a buyback?
Well, the first thing is to look at the company's overall financial health. Are they making money? Do they have a solid financial position? Are they consistently generating cash?
Because a buyback doesn't make sense if the company is struggling.
Right. Exactly. You also want to look at their growth potential. Are they investing in research and development? Expanding into new markets, maybe acquiring other companies.
Because if they're just trying to pump up their stock price in the short term, that's not going to last.
Right. You want to see that they're thinking long-term, using buybacks to really build value for the shareholders.
It's about seeing the bigger picture, not just that one piece.
Exactly. Another important thing is to think about their industry and the competition. Are they in a growing market? Do they have a strong position? Any threats on the horizon?
Yeah, like a buyback could be great for a company that's on top, but risky for one facing a lot of competition or new technology that could change things.
You got it. It's all about understanding the context, making sure their buyback strategy lines up with their overall business strategy.
Now, one thing I've been wondering about is how buybacks compare to dividends. Both seem to be about giving back to shareholders, but they do it so differently.
That's a great question. It's one that investors debate a lot, actually.
Like the chicken or the egg question.
Maybe not that deep, but yeah, people have strong feelings about it.
So let's break it down. What are the pros and cons of each?
Okay, let's start with buybacks. One good thing is they can be better for taxes. When a company buys back shares, you usually only pay taxes when you sell those shares, not when the buyback happens.
Unlike dividends where you pay taxes right away.
Exactly. Another plus is they give companies more flexibility. They can buy back shares when they think the price is good and adjust how much they buy back, depending on how the market's doing.
It's a tool they can use strategically.
Right. Now, about dividends. One big advantage is that they provide a steady income for investors.
Especially for people who are retired or need income from their investments, dividends are really important.
Absolutely. Dividends can also show that a company is financially strong and wants to reward its shareholders.
It's like they're saying, we're doing well and we want to share the profits.
Exactly. But dividends also have their downsides. One is that they can limit a company's flexibility. Once you start paying dividends, you're kind of expected to keep paying them or even increase them.
It's a commitment they have to keep, basically.
Yeah. And if their earnings go down, they might have to cut the dividend, which can look bad to investors.
So it's a tough decision for companies.
It is. They have to balance rewarding shareholders with keeping their options open.
So there's no right or wrong answer. It depends on the company.
Exactly. There are lots of factors to consider, like their situation, industry, growth potential, and what their management believes.
Okay, so no easy answers when it comes to buybacks versus dividends.
Nope. It's a complex issue, and investors need to think about all sides of it before deciding.
Well said. And I think it's important to remember that buybacks, just like any financial strategy, can be misused.
Oh, yeah, definitely.
We've talked about how they can be a sign of confidence and a way to reward shareholders, but they can also be used to manipulate earnings or hide problems.
Absolutely.
So it's crucial to be skeptical and do your research before getting too excited about buybacks.
Exactly. Look beyond the announcements. Dig into their financials, their management, their competition, and their long-term plans.
Because as we've seen, buybacks can be a powerful tool, but they're not a guaranteed win.
Right. In the wrong hands, they can hurt a company in the long run.
It's all about being informed and asking the right questions.
I completely agree. And I think that's a key takeaway from our deep dive into stock buybacks.
It's not enough to just know what they are. You got to understand why they're doing it, the good and the bad, and how it fits into their overall plan.
Precisely. And by doing that, investors can make smarter choices and hopefully, make more money.
Now, I have one more thing I'd like to talk about. We've talked about buybacks as a signal of confidence in the future, but what if it's more than that?
I think I see where you're going with this.
What if these huge buyback programs, the billions of dollars Etsy, Kroger, and Marathon are spending, what if it means they see even more growth than analysts are predicting?
That's an interesting thought.
I mean, these aren't small buybacks. They're putting serious money back into their own stock. Could it be they have information that suggests even bigger returns are coming?
It's definitely possible. Companies have access to a lot of data that we don't see publicly. They're always looking at market trends, consumer behavior, and how they're performing.
And if they see something really amazing coming, it makes sense to invest heavily in their own stock through buybacks.
It would. It would be a way to take advantage of that growth before everyone else catches on.
And that's where things get exciting for investors who are paying attention.
For sure.
If these companies are right and their buybacks are a sign of big growth ahead, then investors who get in now could see some impressive returns.
Absolutely.
It really feels like we're trying to solve a mystery.
Right.
These companies are leaving clues about the future with these buybacks, and it's our job as investors to figure them out.
Yeah, I totally agree with you. Buybacks are a way for companies to communicate, but it's a message that takes some work to understand.
And what really stands out to me is just how huge these buyback programs are. We're talking about billions and billions of dollars being put back into these companies. That's a big statement about how they feel about their own future.
For sure. It's not just a little pat on the back. They're making a huge investment, and that tells me they think they can make even more money than people expect right now.
Which makes you wonder,
Uh-huh.
what do they know that we don't?
Right. That's the big question, isn't it? Companies have so much information that we don't get to see. They know their performance, they do market research, they're plugged into industry trends.
And they're using all of that to try and find the best ways to increase their value for shareholders.
Exactly. So it's very possible that these buybacks are happening because they see something coming that's not reflected in the market yet.
Something that can mean huge growth and profits down the line.
Exactly. And that's why it's so important not to just stop at the buyback announcement. You have to dig deeper. Look into their story, their strategy, their potential.
Because the buyback is just one piece of the whole picture.
It's a clue, but not the whole mystery.
So how can we, as investors, put all these pieces together? How can we get better at understanding what buybacks really mean?
I think the key is to have a system for evaluating these programs, a system that doesn't just look at the headlines, but really considers the company's financial health, their growth potential, their industry, and their management team.
So it's not just about the amount of the buyback. It's about understanding everything that's happening around it.
Exactly. You got to ask yourself, does this buyback make sense for this company right now? Are they using their money wisely? Does it fit with their overall plan?
Because a buyback could be a great sign for one company, but a warning sign for another.
Absolutely. It all comes down to the specifics.
So we have to be careful, think critically, and do our homework.
Couldn't agree more. Investing isn't just about sitting back and watching. You have to put in the effort, do the research, and always be ready to learn and adapt.
And honestly, that's part of what makes it so interesting, isn't it?
It is. It's a challenge. But the reward of finding those hidden gems, those companies that are about to take off, that's what makes it worth it.
And sometimes those hidden gems are right there in front of us, hinting at their potential with moves like these stock buybacks.
Exactly. It's about knowing what to look for and how to make sense of the clues.
Well, I think we've uncovered a lot of clues in this deep dive into stock buybacks.
It's been great exploring all of this with you.
I hope our listeners feel like they've got the tools to go out and do their own investigating.
Knowledge is power, and when it comes to investing, that power can lead to success.
So until next time, keep those brains working, Keep asking questions and keep exploring the world of finance.
Happy investing, everyone!